Everyone, it's Kevin Clark. I hope you all had an amazing Thanksgiving. I just want to give you your quick December 1st update here, go through the numbers of November, see how we're doing year to date, and talk about how we're going to finish out the year end here. So with November ending, we saw some pretty good volatility increase back into the markets, including today. The markets are headed up pretty high right around lunchtime here on the first trading day of December. Um, However, the markets did lose a little bit of money in the month of November. The Dow lost just under 4% at 3.7. The S&P just lost about 1%, 0.8%. The NASDAQ was actually up 0.25%. But year to date, no need to panic. Volatility is here. Even with the November losses, the Dow is still up almost 13% year to date. The S&P is up just under 22%, and the NASDAQ is up just over 20%. And the volatility is probably going to be here to stay as we go into year end with the up and the down cycles. One reason, scrolling through Facebook the other day, literally saw a couple different opposing stories on this new variant that's out there. So I think the market's a little bit skeptical of what the response is going to be. And until we get more clarity on if this thing is going to be a economy inducing shutdown, if there's going to be massive travel restrictions, or if we as a society are going to pull back spending or change our habits, we're going to see a little of the volatility stick with us. Also, going into year end, we expect a lot of tax law changes going into next year. We're seeing a lot of rich billionaires starting to sell shares of their own stock to lock in the sales before capital gains will probably end up going up next year. So we might see some increased selling due to that as well, especially if there's going to be some sort of billionaire tax or something of that nature. They're going to have to actually raise cash to pay all that. So I think we're seeing a little increased pressure with that going on as well too. But other than that, I think we're handling volatility well. Now, speaking of volatility, there's really only two ways to actually deal with volatility if you're using our system. One is using our strategic models, where we're going to give you a nice broad asset allocation and rebalance on a quarterly basis. What we're trying to do is get the different pieces of the puzzle. Some are going to be up, some are going to be down, some are going to be sideways. We're not trying to predict when each is going to be. And we're just going to keep that asset allocation rebalanced every single quarter. So if you're using our moderate model, we're going to have 60% in stocks, 40% in bonds or cash, and it's going to rebalance back to that every single quarter. Our semi-tactical models start out the same. So when the markets are all up, our moderate model is going to be 60-40. However, given the current market conditions or anything of that nature, when we see signs of trouble, then we have the ability to raise cash. So our current allocation for the moderate model and our semi-tactical model is actually 30% stocks, 40% bonds, 30% cash. Because back in September, we raised 50% cash in all of those models. And I'm going to preface, we have some new models coming for self-directed brokerage accounts. So if you have the ability to move money into a self-directed brokerage account and no longer just use your core lineup, we have some new models coming to you come January 1st. So we're going to have some pure tactical, not semi-tactical anymore. We're going to have ESG models for those that want to start putting some meaning behind where you put your money. And we have a firm that's going to be providing biblically responsible investing models, BRI. So if you want to invest, the biblical, they have models that we're going to duplicate with their permission through our software. So we're really excited about what's coming up, come January 1st. So keep an eye on your email. And then if you're interested in any of those, let me or your advisor know. And as always, today is December 1st, so you should have received email for future contributions, money that's going into your plan with your next paycheck. We change that normally on a monthly basis as we're trying to take advantage of dollar cost averaging, especially with the volatility. There's some pretty good buying opportunities here, and that's how we want to direct those dollars. So if you're using either our semi-tactical or our strategic models on December 1st, 9 a.m. Eastern time this morning, you should have received an email or push notification letting you know exactly how to position the next dollar that's going in with your next paycheck. And with that, I'm going to say, I wish you all a very, very healthy and prosperous December as we head into the new year, the holidays, Christmas, Hanukkah. If you don't celebrate the new year, everything we have going, please don't hesitate to let me know or let your advisor know if you have any questions, if you have any concerns, if you have any comments, or if you have any suggestions on how we can make the service better for you. Don't be shy. With that, I'm going to say, Kevin Clark signing out, making it awesome December. Peace.